warm welcome back. This is Sage and you are watching Kalkine TV live from Sydney. And this is the Mid-Market Pulse. So let's get straight to the mid-market commentary for today. The ASX 200 is up 0.22%. Woolworths sags on cancelling plans and a weaker third quarter. By afternoon, the benchmark index ASX 200 added 22.20 points and traded at 7,086.90, up by 0.31%. 6 of 11 sectors gained over yesterday's closing, and consumer staples shares were struggling. Energy remained the top performing sector today. And now let's have a look at some updates from the supermarket giant Woolworths Group Ltd, who has traded lower after it decided not to go ahead with Darwin Dan Murphy's development. The decision was taken after a panel review that received feedback from various stakeholders. After the review completed, panel's chair, Danny Gilbert, AM, suggested that the development should not move further. The board has supported management's advice to not go ahead with the development, and the review suggested that Woolworths did not do enough in this community to offer best practice engagement of the level expected out of Woolworths. The company also revealed its performance card in the third quarter. Woolworths Group Ltd shares declined by 3.09%. And moving on to the next news, Sydney's median house prices rocketed to over 1.3 million Australian dollars. And Sydney's median house price saw a rapid acceleration in price growth, primarily due to upper-end homes, and prices are at a new record high of over 1.3 million Australian dollars. The quarterly median price increase of over 100,000 Australian dollars is due to multiple factors, including massive gains in Baulkham Hills, eastern suburbs, the Hawkesbury and northern beaches. All regions in Sydney hit record high prices and no area remained untouched by this price hike. There is a huge demand for freestanding houses and people are looking for bigger properties. The government stimulus also contributed to the price hike. The next big news is from the American technical giant. Apple net profits double in the second quarter. The world's largest technology company by market capitalisation, Apple Inc. reported doubling of its net profits in the first quarter of the financial year 2021. And Apple reported net profits of $23.63 billion in the quarter ended March 2021, compared with $11.25 billion in the corresponding quarter last year. Apple follows financial calendar of October to September. The surge in the bottom line was driven by a healthy top-line growth. Buoyed by increased sales of its iPhones, the total revenues of Apple in the March quarter stood at $89.58 billion 54% more than $58.31 billion clocked in the corresponding quarter last year. And the sales of Apple's iconic iPhone stood at $47.94 billion 66% more than $28.96 billion in the March 2020 quarter. And significantly, iPhone sales constituted 54% of the company's total sales in the quarter. Meanwhile, the sales value of Apple's MacBook, a line of personal computers, increased by 70%, and the sales of iPad surged by 79%. And now let's come back to Australian share market space. Here are the ASX-listed companies that are in the news today. The GPT Group announced the operational update for the March quarter ended on 31st March 2021. The period witnessed robust rent collection across the portfolio, and rent collection rates were reported as 105% of net billings. The continuous payment of outstanding debtors from the previous year totalled retail rent collections at 110% of net billings. Collection levels for logistics and office portfolios were 100% and 101% of the net billings, respectively. GPT Group stated that economic recovery is boosting its operating environment. Following the practical completion of 32 Smith, Parramatta office portfolio occupancy reduced to 91.9% as against 31st December 2020, when it was 94.9%. GPT Group is assuming that the economy Recovery will continue and there will be no further substantial disruptions due to pandemic-related restrictions. The group provided its financial year 2021 earnings and distribution guidance on 19th April 2021. It estimated 8% of FFO per security growth and 12% of DPS growth as compared to 2020. The GPT Group shares were up by 0.638% in the afternoon. Infratil Limited on Thursday announced an agreement to acquire stakes in Pacific Radiology Limited. The infrastructure investment company said that it had executed a conditional agreement to purchase between 50.1% and 60% of Pacific Radiology Group Ltd. Infratil would acquire stakes in diagnostic imaging business in New Zealand from existing doctor shareholders for up to 350 million New Zealand dollars. The transaction is expected to be completed by 31st May 2021. And once the acquisition would be completed, the existing doctor, shareholders and management would hold between 40% and 49.9% of Pacific Radiology. Commenting on the development, Infratil CEO Jason Boyes said that the Pacific Radiology acquisition, if completed, sat well with Infratil's other high-performing, high-quality assets and builds on its investments last year in QScan Group. Shares of Ramelius Resources Limited closed 9.2% lower at 1.625 Australian dollars a piece on Wednesday, even after the company managed to meet gold production targets for the March 2021 quarter. The fall was in line with other ASX-listed gold stocks, which were under selling pressure in an otherwise positive broader market sentiment. The gold stock Ramelius Resources Limited opened lower at $1.76 Australian against previous close price of $1.79 Australian and declined as much as 9.77% to hit the day's low of 1.615 Australian dollars on the Australian Securities Exchange or ASX. Ramelius said it had produced 66,029 ounces of gold during the March quarter across its Mount Magnet and Edna May projects in Western Australia. The production was in line with its projected guidance range of 65,000 to 70,000 ounces, and Ramelius Resources said it in a filing to the ASX on 28th April. The all-in sustaining costs, or AISC, a metric used for comparing costs per payable gold unit sold, stood at $1,370 per ounce, which was within Ramelius guidance's range. Perpetual Limited has witnessed a sharp rally from the low of $30.11 Australian made on the 5th of March 2021 to recent highs of $35.92 Australian tested on the 26th of April 2021, a gain of approximately 19.3% in the last 2 months. On Monday, Perpetual Limited stock prices closed at $35.39 Australian, level up by 4.36%, and was one of the top gainers in the ASX 200 benchmark index. Stock outperformed some of its competitors, such as Pinnacle Investment Management Group, IOOF Holdings Limited and Pendal Group Limited. Perpetual stock has broken out of its rising wedge pattern at $34.90 Australian levels on 26 April 2021 after consolidating for more than 3 months in a wedge pattern. The price registered a decisive break out of the wedge pattern that suggests a change in the trend from sideways to upwards. Perpetual Limited stock has also broken a horizontal trendline resistance level at $34.40 Australian levels. Post that, the share price has been consolidating. And thanks again for your time watching. That's all for now. Stay tuned with Kalkine TV for more live market updates, and we will be back no doubt with more news on markets, economy and diverse themes and sectors. Sage signing off for now.